G'day and welcome to this week's video. My name's Robert Goudie, and this week we're going to have a look at ownership of a lot of the listed businesses and obviously the effect that it has on return. So we're really looking at the insiders of the business, the directors, the founders of businesses that still have equity and a large amount of skin in the game, and obviously the effect on returns, and also how you look in to see what directors own. So we'll just kick off with a bit of detail around insider ownership, and we're talking about directors and the board members. And there's some study that's been done, obviously mostly in the US, but the Harvard Business School have found that businesses that have a lot of obviously internal insider or director ownership over time perform about 6% better than the market as a whole. And I think it's a very clear point here from Buffett, and I think we'd all always agree that and when he talks to his shareholders, he can safely say that I have skin in the game in Berkshire Hathaway, so our interests are absolutely aligned. If I do well as a director and CEO of Berkshire Hathaway, and because I've got lots of shares, you will win also. So you've got more skin in the game, you've got a stake in the company, you've got more to lose, more incentive to do well. And of course, I think it was end of 2017, Buffett has owned, I think it could be a bit over 50 years, but he bought his first Berkshire Hathaway shares at $7.50 US. They're now worth just under 300,000. So you can see here that he owns just over 282,000 A-class shares, which is worth over $83 billion. And there's a very good quote from Peter Lynch where he spoke about obviously insiders or the directors of a company, the people running it, could sell for many different reasons, pay tax, buy a home, lots of different issues, but they only buy for one, and that is with the prospect that the share price might go up over time. And this just gives you a bit of a look at the analysis of what skin in the game, directors, business owners that own the business, the performance over time. This is just a interesting infographic, good pie graph, where it looks at Facebook and who's the owner of Facebook. We can see that Facebook staff own 30% or 15 billion of it. Now there are tens of thousands employees at Facebook, so that's spread over a lot of different people, but their interests are absolutely aligned with other shareholders. Obviously Zuckerberg's there with 24% or $12 billion. Other co-founders in there as well. The Russians have an ownership, and this is some of the more the corporate people. Goldman Sachs clients have obviously been there for a long time, and obviously down the bottom here, I'm surprised, but Elevation Partners, which is obviously Bono's investment firm, so quite interesting. But shareholders of Facebook are well aligned with staff and also the management of the business. So obviously these guys are making it a win for themselves, which in turn will make it a win for all shareholders. So how do you track and find out what management have got interest in their businesses? Well, I think the first place to look is annual reports. The full annual report will show what your directors own in a company. So then on an ongoing basis, you'd need to watch the announcements that come through where you can see shareholders are buying and also selling. If directors are selling, you may look at the reasons why they've done that. Some of them do sell shares to take up options in the business, so we wouldn't see that negatively, but a share price that's ran really hard and you've got a director selling after the prices ran quite hard, that you could question a bit more and perhaps worry a little bit more. But so go into the ASX website under company announcements and look for change in directors' interest notices, and then you can see what the directors are doing on an ongoing basis. It's also worthwhile, and it's something that I do, is look for change in substantial holdings. So any individual or fund manager that has 5% ownership in a business, they need to report that substantial holding, that they've got 5% or more, and when they buy more or sell, they need to still let the market know. So it gives you a good idea of what fund managers are doing and what businesses and institutions are buying a particular business. So just an interesting one to have a look at. Clearly, it's a benefit if management and shareholders' interests are all aligned. I'm a big fan of that, and it's something I watch for when I provide recommendations to my clients. So thank you for listening. Thumbs up for the video if you wouldn't mind, and subscribe to the channel would be great. Thank you for listening, and we'll catch you next week. Bye.